of their normal exports are going through the Strait of Hormuz now, and all of the other loadings, in the Gulf, are all on schedule. No one is interfering with the flow of crude, so
Mm.
it's it's very much like Ukraine in a way. I mean, the lead up to and propagation of the war was the very same vibe. Fox News saw Lindsey Graham and all the war hawks. We got to go kill a lot of people. That's not getting as much traction as it did in Ukraine because the overall level of propaganda, saturation of media is far, far less. And there is a certain amount of justice in what's going on, although we all should be very suspicious of, where we go from here, I think. I think,
Yeah.
like I wrote today, that a lot of people, who've already lost wars continue to fight them just to get better terms. It goes back to medieval times, and we're kind of in that stage right now. As soon as you're asking to negotiate, you've lost, I think.
And do you think that's why, hey, everybody joining on YouTube, I think there was a little delay, but it's good to see all of you. And of course, everybody on Substack. So it's so interesting. And just to level set, uh, we're going to cover all the things. JJ looks at everything. He's amazing. But he's been in oil. And had some ups and downs, and I want to come back to that because I think that's so interesting. But you're flat now, and do you think that based on what you just said about, it's kind of already over, maybe just on better terms. Is that why the market, you're not seeing an outsized move in crude? Do you think the oil market's looking past this right now, or is there still a lot of risks around this whole situation?
We're oversupplied in oil, period. So, if you're trading oil, you got to keep that in the back of your mind. I mean, people people are going to hold a little extra inventory. I think there's some spec in the market, but I haven't seen any real evidence of that. Open interest is in the upper regions, but it's coming off a bit.
Mm.
There wasn't really a short position, even though the Trump drumbeats about we're going to drill, and everything like that. Most of the short selling was just liquidation, margin selling, which came with equity liquidation. When they call for margin, it doesn't matter what you have on or how good it is. It's going to get sold. And
Mm.
crude was one of those things that had to get sold. And everybody else was like saying, well, why? We don't really want to have a lot of risk in this. And so as May developed and it unfolded, we had a rally, we had another dip, and I'll say this: if there was a big short position, we'd be trading 90.
Mm.
And so
Mm.
we're in the 70s now. This is where we were in March. I always say, rallies in a bear market make the market weaker. And, you need, you need a, you either need a fundamental case where there's not enough of the commodity or a technical case where people are over their skis with a bad position or they're going to get squeezed out or something like that. None of that. I don't see anything like that right now.
Mm.
All I see is a little tension about whether or not something really, really bad is going to happen because, well, we've all seen this movie, and Iraq was just very messy. Where
Yeah.
for years and years and years, if something like that were to happen with Iran, which I don't think will, it's 4 million barrels a day coming off a fairly balanced uh, supply demand situation. I mean, we're well supplied in oil. The market seems to be comfortable with a $70 price. They'd rather have it higher. Of course, producers always want it higher. Consumers want it lower. Trump wants it at 50. Will he get his way? You never know what he's going to think. So
Well, if there wasn't ever a truer thing said, that's what everyone's grappling with now, which is that, especially going into a weekend, it's hard when you don't know, you could see one tweet or one comment, you don't want to be on the offside of that. Is that why you're flat, by the way? Are you flat just because of headline risk, or are you flat because you actually think oil should be lower from here?
well, he said we're going to pause for 2 weeks. That poof, just blew the air out. I mean, vol came
Mm.
in. I don't know, 10% immediately, right? They're in 5 today. So if you're holding options, for the next 2 weeks, you're going to get crushed. So
Mm.
I think, and so why do you want to be in that, And the other thing is, the meat in the sandwich is already gone. It was just this big spike. It, what's the next, what's the next move? Best case, I think, for because the Saudis, they've still got an axe to grind with some of the guys that have been cheating on them. And this spike is not going to solve that at all. They want market share. They've been
Yeah.
cutting 2 million barrels a day for almost 2 years. That's subsidizing everyone, including our guys in the Permian. So, they want to take that back. And the only way they can take that back is to prove they still have control of the market. The only way they can prove they have control of the market is to take the price down.
Mm.
They can't take it up. The only way they can take it up is to cut, and that's going to make it worse for them, right? And I've seen this since '86 when Yamani did it. He took it from like 25 down to 10, and then it was an amazing shit show. So everybody said Uncle okay, and periodically this always happens. They try to regulate the price. They're a community of liars and cheats. I say that objectively, not pejoratively. Every producer is going to lie, even a guy who's growing corn out in the Midwest. He's got a great crop. He's going to tell you it's dry and he's
Yeah,
terrible.
they're talking their book, right? That's the original, like
Yeah, yeah.
literally talking their book.
That's the oil game right now. Obviously, they're going to try to keep it up if they can, but it's not, I don't think it's going to hold. I don't think it's going to last. I don't think Trump wants wars. He's not going to. He's not going to put our nation at risk for anyone. Actually,
Yeah.
why they hate it having him as president.
Yeah, I think the worry is always that, something unintended happens or while you're distracted here, then something happens elsewhere. Just want to circle back on something you said at the very beginning, which was that you got stubborn. You made a bunch of money, you got stubborn, and you got out in the nick of time. It's amazing, and thank you for being so transparent about that. But it's amazing that somebody as experienced as you still finds themselves in that situation. Because this is, I mean, but it's, I think, probably comforting for people to hear that. So,
Yeah, so I'm pretty disciplined though, after all the broken bones and scars and everything else, I know when I'm being stubborn, but I have reason for it because, you know, you, you can you can make a living hacking and chopping around in these markets with all the disadvantages. Really, I have no information flows. I only have what I know about what the markets are telling me from my screens and my friends who are on chat, who are really always too busy to say anything to me. So I have to go bugging them. What's this? What's that? But at any rate, if you have an opportunity to make a lot of money, you got to try. You got to be you want to play. You got to pay, right? So there are times, in the middle of a big move, like we were in crude, where instead of nibbling on it or fiddling with it or anything like that, you should be ramping.
mm,
You should be pushing. Because if you can get that right, it can be life changing. And so, having done it once or twice, 3 times, 4 times, I don't know in my life, really, I felt like, hey, stocks are crashing, crude is crashing. I'm not buying this.
mm,
Wrong call. It was the wrong
yeah.
call.
But I appreciate that. I appreciate that perspective. It's like, no risk, no reward, as long as you're being careful and you don't, completely torture yourself. And this is where your experience matters. But the idea that you can make money without taking any risk is not true. I mean, sometimes you got to go for it. You're going to be wrong sometimes, but you're going to be right. And if, as long as you protect yourself, I think that's really good advice. So how are you feeling about stocks here? Somebody just in the chat said Nvidia bulls are quiet this week. How are you feeling about stocks where they are here?
Well, from a high level, there's there's the stock market, and then there's a collection of really really big stocks, which dominate everything. So I don't think that's going to last. Nothing ever lasts. Right now they say only one tree at the top of the hill. So what do we have like 45% of the market cap is in 10 stocks.
Mm.
And so, I'm very leery about being long because the overweights are so dangerous. Like NASDAQ, that flows going in there. We've got a $50 trillion market cap that's moving around 20% at a clip, right? In 3-4 weeks. So if you get that wrong, it's a big hole to kind of get out of. So
Mm.
on the other hand, it's it's very transparent how it operates. I think it's a rules based system now, box to box. 95% of it is really electronic, algorithmic, AI.
Yeah.
So I just look at the market. Probably I'm usually flat coming into the morning. I'm asking myself, well, are these guys going to buy stocks today? Yes, they buy stocks every day, no matter what, right? It doesn't matter. They're bombing Tehran,
Yeah.
chaos in LA. They burn out the city to the ground. Glut of real estate on the market. There's just, you can go on X, you can read all the bad news you ever want to know, which used to have an influence on stocks, but it's not because there are really only 10 of them. If no one sells those 10 stocks, the market will not move. And
Mm.
buy those 10 stocks. And this is a really useful thing that I found. I'm always looking for the meat of the money to come in on the opening, which I can't trade because it's going to happen really fast. But then it gives me like a heads up. Okay, boom, we popped up 25 handles, right? Sort of flows across there. A little bit after lunch, around 1:30, 2 o'clock or something like that, but pops up. So if it pops up again 2-3 times in 5 minute sequence, it's highly likely you're going to have a strong afternoon. So you just have to look for the first dip, buy a couple lots. How much do you want to make, right? You're not trying to make a killing here. Just want to make a little money. This is how you can make a living.
Mm.
And, you know, so you just want to go with the river. It's like surfing, right? How are the waves? They're pretty good. I think I'll paddle out, catch a wave, make some money. That's the stock market for me. Investing,
Yeah.
I would not do that. I would not invest in the stock market, period. Too dangerous. I
Wow.
Last time I talked to you, I can't remember what. I think it was in March, and you said, "Well, what's going on here?" And I said, "I think the nervous system of the stock market has died." And it's been, they stripped out the spine and they replaced it with this robotic thing, which you can catch waves on that, but you never know when they're going to change their minds. And when
You
it happens,
know,
sorry.
You said that last time, and I remember, like, it gave me chills because I think it's such an accurate description of what's happening when we try to talk about passive and, it can be very technical, but that description is I think one that we can like viscerally feel. And the same thing happened to me just now when you said that because, it's we talk about all the time, is something going to break? Is something going to break with all of the sort of imbalances? You're sort of saying it already broke. And it's now this kind of robotic monster, thrashing around, which has been making money. But if it turns, it's unpredictable, and it's gonna create a lot of damage potentially.
Well, it's tough because people have become so complacent. Uh, I worked for a bank for a number of years, and they do matching funds, and so you always take 100% of the matching funds. You put your money in, and it automatically just flows into these indexes. And if you do that over the course of a career, no matter where you're working, for any of the major corporations and so forth, that money flows into the market every day. So it's constantly there. It just never goes away. And so that's another thing. You don't want to swim upstream. It, why fight it? But on the other hand, there are no people in the market anymore.
Mm,
There's just just AI algorithms processing
mm,
flows going from all these, capillary tributaries in our economy going into the market every day. So keep that in your mind, say, well, okay, what am I doing out here? It's not the same as gold or crude, which are, they're limited. There's only so much gold. And
Mm.
most of, not to take an off ramp here, we'll come back to stocks, I want to stay on them. Most of the things that are affecting gold right now are exactly the same things that were affecting gold last year and the year before. Rather than worry so much about what the price of gold is doing, which is completely different than stocks, I'm always worried about the price of stocks because the stock market is a collection of algorithms looking at rules that, when true, they execute a certain amount of programs and volumes and so forth, managing risk. It's very much like that movie Margin Call. I don't know if you've ever seen that movie.
Mm-mm.
That was really forward thinking a movie. You should check it out sometime. Uh, that's where we are right now, I think, in the equity markets. It could go on for a long time, but could still trade it and make money. Be flat at night.
Yeah. Yeah. That's so interesting. So, Ree Green said the problem with interest rates being cut and cut, where do investors go to try to keep aloft with inflation? I think that it's a good point about why people, even though they're worried, stay in equities because they're trying to get some sort of return, right? Um, I think this is where the conversation out of stocks and bonds and diversifying into other sources. That's why we're seeing so much interest in gold now, right?
You can get a pretty good cash. I use treasurydirect.com. So I don't have to pay somebody to buy me T-bills, it's linked to my checking account. And I go on to their website and I say, I want to participate in this auction. I schedule what I want to do. And you get, it's free, no skids, no slippage. I'm in control of my money, and my counterparty is the United States government, which is a generally good feeling. Uh, you can stay out of the market, and not lose. I mean, not losing is winning. Um, And I'll say one more thing. I learned this a long, long time ago. And all the great spectrum of all the assets that are available to you, you have equities which have been miscast because people want you to buy them. They
Mm.
are the ass end, the bottom, the last car on the train, the caboose of value in the paper chain of value. Right? That they are worthless. An equity, you've got nothing. And if you buy an ETF of equities, you don't even have the equities. All you have is a right to the return on the equities, and there's like 11,000 ETFs, something like that. There's just a vast, vast number of them because they've been sold to people who it's not their job to not understand these things. They work hard, they make money. I've always been a decent trader. I have not been a great investor. I try. I usually, get frustrated, get out when I shouldn't. Boom, stock goes.
I think a lot of us feel that pain, JJ. A lot of us relate to that.
Right. So, yeah, bonds, you're going to always get your money back. You might not get it all back. They may tax you on what you get, but you're always going to get your money back. And you don't have to go 30 years. I mean, if you're not going to live for another 30 years, why should you buy those?
It's true. If you're, if the time frame matters, we always say. I'm surprised we haven't gotten any questions about gold yet, since this is an area that you write about and spent many years on. And don't forget, if you are watching, you can move your fingers and put a question in on Substack. The YouTube folks know that they're asking questions. Substack, you're used to viewing, I think.
I'm
But
good.
what about how are you feeling about gold here?
Like I said, everything that made it go up is still happening. China's still buying. They're buying platinum now. I don't know whether this is going to become a thing or not because platinum is a pretty tiny little market,
Mm,
a lot with a little bit of imbalance. Gold is a $22.5 trillion market now. It's bigger than the mags, bigger than Mag Sevens uh, by a long shot. Um, and the the source of buying is coming from central banks who only own about 15 or 18% of the total amount of gold in the world, right? So it's it's kind of matched. It's really interesting. Like total supply of gold was about 5,000 tons last year, and total demand for gold was about 5,000 tons. So most of the movement up we've had in the last couple of years has been a very marginal imbalance of demand.
Mm.
It's a really tight market, and we saw that at the end of Q4 uh, and Q1 2025 when the BOE had a run. They had a, they say it wasn't a default. Well, I say if you go to the bank and you ask to get your money and they say, well, we don't have it, that's a default
Mm.
for me. And if they say, oh, no, we have it, we just don't have it today. We'll have it in a few weeks, but trust us, And in the end, they did, and so now gold is kind of calm, it's relaxed, and so forth. But underneath the calm waters of gold, there's a lot of furious paddling going on. Very furious paddling. And you look across, you're going to think, well, it's all cool. Little trading range here, mid 3,000, 3,300, 3,400, and so forth. But it would take me a long time to tell you what all those forces are. Let's just say there's, um, when markets behave like this, it went up in 23, went sideways for a few months. Then it went up in early 24, went up a lot, sideways for a few months. Then it went up again, it's gone sideways for a few months. Now here we are, went up to 3,500, it's going sideways for a few months. It's a very declarative statement that the market is trying to auction out uh, an imbalance of supply. There's just not enough of it,
Mm.
And where's it going to come from? You know, uh, Most of it's diffuse. It's being held all over the world. Um, there's no investor demand here in the West, and if that were ever to happen, I mean, gold could do some surprising things. But so far, that hasn't happened yet.
Mm. That's a big missing piece. Nico's saying, what does JJ on Substack? What does JJ think the reaction of gold is most likely to be if Iran escalates this weekend or next week? It's been pretty muted so far.
Well, gold is muted because it's not about oil. It's not about even regime change. It's about getting rid of this kind of infectious obsession that the leadership of Iran has had for decades, and I I I think that around that, there are people who would love to just get their hands on Iran's oil. They'd like to break it open like Ukraine,
Mm.
start a really big war so they can go in and they can bribe people and they can, suck a lot of money in and do that. And you know who those people are. So, but I don't think Trump's going to let them do it. They were able to do it in Iraq because it was Bush and he was all for it. And we were able to do it in Ukraine because I don't think Russia started that war that way. Russia's been very passive about this. They finally just got to the point where they just said, screw it, all right, we can just sit here and until it gets so bad we have to fight or fight on our own terms. At any rate, those same people want to do that, I think, in Iran. But I don't think Trump's going to let them do it.
We've got some more questions. If you want to dig into that thinking, JJ put some of the stuff in his Market Vibes part, which I mentioned before, is always so interesting in his Substack, as well as dig into the sort of underneath flows of gold that he didn't have time to get into. You can get all that on his Substack. Rich asking, is the oil gold ratio broken?
Yeah, big time. just like almost 60 barrels of oil for 1 ounce of gold. I mean, if you do the math on that, I mean, you could drive your car for a year on 1 ounce of gold or more. It's amazing, you know, how the thing about gold right now is it's a clear statement on how worthless everything else is. And
Mm.
oil is just amazingly cheap. Like right now, I think the ratio is down to like 40 barrels, 40, 42, 43, 45, something like that. So it's broken a great deal. But there are a lot of reasons for that. Oil could continue to get much cheaper. It's so easy now with technology to find it, to fund it,
Mm.
and bring it to market. Where it used to take, if you thought you had something like the Skiana thing with ExxonMobil off the coast of South America, um, that could have taken 5 years, and still been a loser and taken billions of dollars to invest just to find out if it's going to be good. So now, we're we're playing a game of musical chairs in oil where we actually have to kill off major producers in order for the price of oil to stay up. Venezuela's gone. They have 300 billion barrels, highest proven reserves in the world. They're producing less than a million barrels a day now, and the country's in chaos. Angola
Mm.
dropped out of OPEC. Uh, they're in almost secondary recovery. I mean, they used to be producing about 1.5 million, 1.8 million. Now I think they're down to 1 million, maybe a little bit less. So they'll be gone. And Saudi Arabia, if they decided to do it, say, oh well, let's just produce an extra 4 million a day, that would put a lot of other producers like Algeria's financial break even, probably like $150 barrel. We said they're never going to have it, right? So
Mm.
take the prices down like that. I could foresee something like that, a price war where you wind up with a handful of major producers still standing, a new OPEC in which the United States is one of the dominant members because they're a consumer nation, and then you would have a council, an international council of oil, speaking on behalf of everybody, including China.
Wow.
S-
Interesting.
Yeah, you know, we have so much energy. I mean, natural gas is just a vast amount of it. Russia has it. We have it. If we were to set it free and develop uranium and nukes, use natural gas for what it is. I don't think you can find a better product or with the infrastructure we have than refined crude oil for transportation. And we also have a tremendous amount of petchem products that come out of that, which are never going to go away. So that's fine, right?
Mm.
Um, but the collection of energy assets, if Doomberg is just so good at this, is a very smart guy. Um, in the energy equivalence of all of that, if that were to kick out all the regulations and be regionally developed for the benefit of the people who actually are consuming it as well as the people who are producing it, this gets us to Trump's vision of the golden age, where we
Yeah.
have a harmonious planet via trade rather than a plutocracy. I guess it's the best way to say it. It's this wonky $10 word uh, that derives all of its wealth through wars, forever wars, right?
Mm.
So all of those things, in that, then we have gold, which can move on its own track financially because there's just too much paper currency. This will shock you, and I'm not sure it's verifiable. But when we had the yen carry kerfuffle
Mm.
last August, and Jamie Dimon was running around saying, "There's no yen carry." He had the biggest position in his book. Anyway, so I did as much digging I could into swap risk, which takes us back to margin call. And some estimates are out to a quadrillion of swap risk. Some say it's unquantifiable. It
Mm.
could be more than a quadrillion. And, uh, uh, gold is highly sensitive to these things we cannot see because, it is the nervous system of finance. It's the pituitary gland of capitalism, which is what it's that tiny little part of the great capitalist world that keeps us in balance.
Mm.
And then we could go on about
Let me stop you and ask you exactly that we understand what you mean by that. When you say it's gold is could be affected by these things we can't see, are you suggesting that all that swap risk is a risk for gold, a downside risk for gold, or something that could cause it to go parabolic if we start to see something sort of unwind or a problem based on that swap risk?
there's the only way that it can get smaller, and that would be to have it be forcibly liquidated. Right now, it just rolls forward forever. Whenever you roll your swaps forward, they're always a little more expensive, just like the
Mm,
rolling its debt forward, right? That's really just a big debt. So swaps
mm,
are a similar kind of thing, and they're all different things. But like the yen carry is a swap, right? I I borrow yen, I sell yen, I buy dollars, I buy Nvidia. I make a lot of money. I have no carry cost because the yen's so cheap. It's only costing me 1 or 2%. Or I can do that with euros or with Swiss francs now. They're negative, except for the Swiss franc can appreciate on you, and then you're in trouble. So it's not the most popular one. The
yeah.
yen's to be the most predictable place to borrow money and take it elsewhere to make a bigger return. It's risky
Yeah.
because when it goes south, when it gets bad,
Well, that's what I'm saying. That's why I'm asking, because swap, you can roll them until you can't. And then that's when everybody freezes up and the system looks like the wheels are coming off and everybody sells everything they have because they're trying to make their margin calls, right? I mean, most of the time it operates, but when it doesn't, I know that's a source of worry for people.
so the market is talking all the time, right? And sometimes it yells at you, like pay attention. So that happened last August with Yan Carey, and it you know so they it's Humpty Dumpty fell off the wall, and all the big banks got together and got all the pieces and everything like that, and they patched it up in band-aids. So here's Humpty, he's back up on his wall again. He's got a lot of cracks. He's sitting there, right? So then it happened again. So that's one thing. And then it happened again when the Bank of England ran out of gold. God, how could that happen, right? How could that happen? How does the Bank of England, one of the most stable custodians for gold in history, run out? So all eyes looked over and they said, well, hey, why aren't you borrowing some of the gold from the United States Treasury? They have 8 million ounces out there. Sorry, 8,000 tons, 250 million ounces. Why don't you call them on the phone and say, hey, bro, lend me 50 million. I'll pay back. And so by book entry, just with a keystroke, Treasury Secretary could have transferred 50 million ounces of gold to DOE. Everybody would have been whole. None of this stuff would have ever happened. He didn't. He didn't.
So you think all of these are small signs that there's some larger event on the horizon?
I'm just saying that the leverage is so great over time. If you've been around as long as I have, I remember they put the debt clock up in 1986.
I remember.
Paris on fire. Everybody's saying it's the end of the world. Let's get rid of Reagan, right? That didn't happen. It just didn't happen. So, here we are 40 years later, and, we've got, I don't know how much debt we have. They say it's like 37 trillion, 38 trillion, right? Going to 40 trillion as soon as they pass the bill.
Yeah.
So, crack, crack, crack. Which is why I think, if you're going to put all your eggs in the stock market, like I said, I had a bumpy May because I was piggy, and but I always have in my head a number where I'm out. I
Mm.
I, I don't care.
Super important.
Yeah.
Super important. That's
Oh,
discipline and experience, hard won experience. Paul is asking, because I know we're gonna run out of time soon. Paul is asking, where do you see silver in the next 6 months? And someone else in Substack is asking, is JJ still in his silver trade after taking some profits?
yeah. I think I think the whole metal spectrum is probably going to go up one way or another. I don't see the end of the world. Uh, even if the stock market has a I don't know, it's due. But it's been due for so long. I'm not going to gamble on it. I'm not going to
Mm,
like silver. Let me stay focused on silver. Silver is a great fundamental story. Um, just for instance, I think there's 15 kilos of silver in every one of these Tomahawk missiles, or most of the guided uh, military things have
mhm,
not many kilos of silver in them, and solar is going to continue to sort itself out. It's never going to go away. It's the sun. The sun is the cheapest organic source of energy we can have, and so for the time being, they're going to continue to consume more silver. Then um, we don't have a productive industry. 75% of all silver is a byproduct of zinc and copper.
mm,
So it's actually, they call it throwaway, because some of it, the extra slag doesn't have enough silver in it for him to bother even refining it. So it's just it's what floats to the top in the barrels. They take it out, and that comes in, and that's constantly declining. So the inventories of some of these metals, like platinum and silver, are probably continue to go down.
mm.
And, yeah, it's going to go up. So it doesn't need to have someone like Bunker Hunt come and squeeze it.
Snarky Trader. So I love some of these names. It tickles me every time. Snarky Trader asking, does JJ think the gold buds investing in miners are crazy?
No, but they've got the patience of a biblical character. I mean, nothing harder. I own mines. It's a very hard trade. It really is hard trade. The reason why mines don't go up is it's because they have been terribly dishonest, and it's just it's going to take them a long, long time to live that down. They dilute their stock at all the worst times. They never really, they don't pay you anything. You
Mm,
need little dividends on some of them. I would think, if the miners but the difference between AISC and the market price is so vast. I mean, I've never seen anything like it. You know, $1,500, $2,000 an ounce. They should be declaring mega bonuses to their shareholders, but they don't.
mm.
And right, they
That's a
don't.
great point. Yeah, that's the issue with being on the equity side of that. I know that you got to get to JJ publishes twice a day, so I'm conscious of the publication timeline. So I want to wrap this up. But final thoughts to leave people with as we head into the weekend, JJ.
Well, excuse me. I think cruise is oversupplied, and I think it's either going to stay here or go down. I'd be very careful if I had options on
Mm,
to manage my balls. Um, it's not an oil war, and so there's that. That's my idea in oil. day trade stocks. Uh, be careful. Think about what you're doing. I mean, everybody has to have their own way of trading, but they're very predictable. Um, Metals should go higher. You know, I don't chase rallies. I try to identify where the ranges are. When they get to the bottom of the range, I'm not the guy who's going to be selling down there. Right? I'm going to buy down there because if I'm going to be wrong, I'm going to lose the least amount of money possible. And you can always do that if you're selling at the top and buying the bottom of ranges. Other than that,
Enjoy the sunshine if you're on the East Coast. I'm going to say that. It's been 2 months since we've seen it on the weekend. So
that's it for me.
JJ, it is always such a pleasure to catch up with you, not just because you're so generous with your knowledge, but also from all of the, as I said before, really hard-earned experience that you bring to the table and are kind enough to share with those of us who are a little earlier on the journey. So I so appreciate you.
Thank you, Maggie. Thank you very much for having me. I appreciate it.
Great. Thanks to all of you for joining. Have a wonderful weekend. As always, take care and good luck out there.
Cheers, everybody.